afternoon, everyone. My name is Singa Gunlisa. I am a trader and portfolio manager at Vunani Private Clients. I'm really passionate about what I'm going to be talking about today. You might have seen how the rand has performed in the last few, in fact, months or even years. I think it's quite warranted to talk about it and just educate some guys. I just want to also mention the fact that this presentation is really suitable for everyone, even guys who are not very au fait with trading and investing. I think this will be good for everyone, even the experienced guys will find this interesting. We are about to start in a couple of minutes. I thought maybe let's just give 2 minutes to the guys who are perhaps stuck in traffic, who are trying to log into their computers so that they don't miss a thing. Otherwise, I hope you guys enjoy it, and afterwards you can go into our website, have a look at the things that we do as Vunani Private Clients. We are a South African stockbroker who have been voted in the last 3 years #1 and 2 in South African Stockbrokers Awards in the People's Choice category. That simply means that our clients really love us. They love what we do. They love how we service them. We hope that if you do become a client of ours one day, you would also enjoy the same services. Okay, guys. Okay, guys. I think we should start now. Let's get going. As I've already introduced myself to some of you that have just joined, my name is Singa. We will have a question time at the end of the presentation. Like I said, my name is Singa Gunrisa. I'm a trader and portfolio manager here at Vunani Private Clients. I trade equities, I trade derivatives as well, and I also trade international shares. So those clients who are looking to go into the market, trade in the short term, we do assist them here, and those guys that are looking to build long-term equity portfolios, we also do assist them. We've got a variety of clients with different needs, so we are very happy to speak to everyone. Okay, back to the presentation. Our topic for tonight is 4 ways to profit from an imploding rand. As you guys would have noticed how the rand has performed in the last while, we thought it's very well warranted to speak about the rand and how and what you should do about it. So looking at tonight's presentation, my contents here are a few things. I don't want to bore you guys and give you an economics lecture on stuff that you already hear in the news or you already know or you are a professional in this field. I don't really want to go into detail with that, but just want to mention a few things that I think are important for investors concerning what our currency is doing. So looking here, we've got what drives currency movements as an introduction. Why is the rand falling? The 4 ways to profit from imploding rand. The tools that you can use to actually protect yourself from a falling currency. Major economic focus for 2015, compiled by economists around the world. The current themes driving markets today, And as a bonus, the 5 stocks you need to profit from this downward spiral of the rand. Okay, so what really drives currency movements? It's the exchange rate. The exchange rate is one of the most important determinants of the country's relative level of economic health. So what that means, if the country is performing well, it's growing, it's got employment growth that is looking healthy, its exchange rate gets stronger with that. So there becomes more demand for its products or services. Therefore, its currency will move in the direction of strength if the economy is good in that country. Whilst if the economy is not that great, then you will see a currency weakening based on the number of factors. It's important to mention that the other factors, economic factors that do drive currency movements, are level of interest rates. A country that has got a high interest rates or borrowing rates or lending rates, as you know, some people or analysts or economists likes to call them, will determine where the currency is trading. For example, in South Africa, during the period where our interest rates were sitting, our prime rate was sitting between 11 and 14%, there was a lot of demand for that interest rate yield. We saw a lot of money, a lot of capital coming from all corners of the world into the South African market, and therefore that did really help the rand strengthen. We saw the rand sitting at about 6 rand to the dollar, and that was about 14 years ago, 2001, 2002. So the level of interest rate has a big bearing on where the exchange rate is, and also inflation. If you look at inflation, inflation is really the price of goods and services, and the rate of which it is increases or it is decreasing. Therefore, in an environment where you have a high inflation, you tend to see, demand coming down from consumers, people who make use and who buy goods and services. As demand as demand decreases, then the economy does slow down, and that has a negative effect on the interest rate. And also current account deficit. What current account deficit is, it's basically the balance between the trades that we do with our international trading partners. So for example, as we export, for example in the case of South Africa, we export a lot of resources from our mines, from our platinum mines, from our coal mines, from our iron ore mines. We export a lot of those resources, and we import a lot of other agricultural products, manufacturing and technology. Therefore, if we export more than we import, our current account deficit will be thin. But if we import more and we export less, like right now, then our current account deficit will be large. So we always need to strike a balance between where our current account is sitting. So as it stands right now, we've got a wider current account, which is we have a wider deficit. Therefore, that means that our currency will be under pressure because we are importing more than we are exporting. And then also there is another qualitative factor like political stability and economic performance. Well, really, I don't want to go into details about the politics of South Africa, but as we know, there has always been uncertainty around our policy making and policy decisions that affects our economy. For example, we've got a great policy that has been devised by the government, which is the NDP, but it has not been implemented. There are different groups that are fighting it. We see unions going to the left side saying this will not be conducive to the South Africa they want, and you've got other groups that are looking at it from a positive point of view where they think it will increase our economic activity, thereby creating jobs and improving our economic health. So that indecision, that instability in that policy is really a political uncertainty scenario, which is also not helping the currency. Now let's just look at. I thought maybe let's just look at why the rand is falling. Around half of the fall of the rand over the past months or so appears to be due to global factors, while other half is possibly due to local factors, which we touched on, but we'll just go in a little bit of detail about that. If you look at the chart I've got here, just for illustration purposes, this is a 1-year chart of the rand versus the dollar. If you look at where the rand was in April, you can clearly, April last year, you can clearly see that it was trading just above 10 no, excuse me, just below 10 rands per dollar. But as we go and progress towards 2015, we saw an uptick in the dollar and a weakness in the rand. And this year, up to this point, means that the rand is trading well above 12 rand to the dollar. It is really weakening to the dollar. Therefore, it makes everything that we buy in dollars more expensive than it was a year ago. And anything that the guys in America sell to us, is they make more than they made a year ago. But anything that we sell to the Americans in dollars, we will get more than we got a year ago. So it's a tough balance where the currency should be sitting. But in our case, it is affecting a lot of South African in different ways and forms. We will get to that in just a bit. But I just wanted to show you where the rand is trading and how the trend has been looking. Okay, so now we go to factors affecting the rand. We'll first look at the global factors. Again, like I mentioned, dollar strength has been one of the major factor. The dollar has really strengthened over the last year or two, simply because the economic situation in America has significantly improved. We see strong economic numbers that are coming out in America every quarter. Their unemployment has come down quite significantly. The economy is now growing at 2.2%, and that is the biggest economy in the world. So a growth of 2.2% is really significant, considering the fact that we struggle to even make 1% in South Africa, being a really tiny economy compared to the US. US and UK policy normalization. So when we talk about policy normalization, we're talking about the interest rates. As we've seen in the last few years after the 2008 economic recession, a lot of economies, a lot of central bankers decided to drop the interest rates to zero or close to zero, so that they can encourage borrowing and encourage spending in the economy to really pump the economy to higher performance. And that has paid off in the US, and is showing very good signs in the UK as well. So those two economies, which are very big economies in the world, are starting to now move towards an interest rate hike cycle. Therefore, the monetary policy, which relates to interest rates, is going towards a normalized situation, because it's not normal to have interest rates at close to zero, or even zero, for a very long time. Interest rates must be at least at a level where the lenders, like banks and anyone who lends money, to be able to generate some profit and income for themselves as well. Other factors is global inflation. As we've seen, a lot of products and services are increasing in price. Some technologies are not becoming cheap by the day. We see a lot of capital equipment like machinery not being cheap across the world. You know, all commodities, all services and products that are sold around the world are growing in the purchase price. So the global inflation is also creating pressure into the rand. And then also weak global demand for resources. Remember, South Africa is a resource-driven economy. We are well endowed with resources. We've got great mines across the country, and you know, in the past few years, there was a huge demand for resources coming out from the likes of China, which was really building their country and the economy, and hence now the demand has actually come down, which is then putting pressure into our economy, putting pressure into our current account. We're seeing a lot of deficit now because we are exporting less than what we used to export, and we're importing more, and that factor ties up to what I mentioned in the earlier slides about current account deficit is putting pressure on the rand, and that's a global factor. It's not really, you know, a South African factor, a local factor. It's really a global factor. If there's no country that's looking to buy iron ore or coal or platinum, then our currency will be under pressure because our economy will not perform as well. Local factors, as we know, we every year we have a strike season, which is probably due this year anytime from now. The strike is a disruption to the economy because it stops productivity. Therefore, it puts pressure on the economic performance of South Africa, and therefore the rand will suffer on the back of that. Poor economic performance, I've mentioned it quite a few times. I think you guys have a picture now. We've been getting credit downgrades because of our economic health, because of high unemployment, you know, very low demand for our main, you know, for our main exports, which are resources, shrinking tax base. All of those factors are putting pressure on the rand, and also the situation with Eskom, the headwinds that Eskom is facing at the moment is putting pressure to our economy, because no investor will want to come and build a manufacturing plant or any kind of business in a country where energy is not sufficiently available, and their productions could be disrupted at any time and therefore lose revenues on the back of that. So this whole situation of Eskom is putting pressure on the rand, as we have seen by one of the rating agencies. I think it was Fitch. They downgraded Eskom bonds on the back of that. So that is really bad news for the South African currency. Okay, now we move to the more interesting part, the 4 ways to profit from imploding currency. As an investor, you know, you don't really have to, your money should not really suffer from, you know, the dire situation that the rand is currently faced with. So what you can do, you can go offshore directly. I mean, these days technology allows you to operate globally from the comfort of your couch. You can invest directly into global companies. You probably already recognize some global brands like Google, like BMW, like Johnson & Johnson. Now it's far easier to add these giant stocks into your portfolio, and next to no time you can do it in a click. And that means that you can trade any currency around the world. You can buy a company in dollars and pounds and euros and yens. Secondly, you can buy rand hedge counters or stocks. These stocks are often referred to rand hedge counters simply because they are companies with foreign operations. They're earning money in foreign currency. They benefit more when the local currency weakens against the foreign currency. So if you invest in a rand hedge counter like SAB, South African Breweries, or SAB Miller now it's called, which has operations in America and UK, you then each time our currency weakens versus the US dollar or the British pounds, SAB earns more in revenue. Therefore, the share price will also appreciate. That's one way to benefit from an imploding rand. As I mentioned here, most rand hedge counters run whenever the rand weakens. Their assets and earnings are based offshore, because these companies has operations that are offshore. Third one, you can just simply trade currencies. So the forex, which is what is called the forex market. It is the third and by far the biggest market in the world. It trades 24 hours. You can trade currency pairs such as dollar, rand, dollar, pounds, dollar, Australian dollar. You can trade all currency pairs. We've got platforms that are available for people who are interested in just trading currencies to go for. Trading currencies is quite simple. You are just betting on which currency will be stronger on the day, or on the hour, or on the 10 minutes that you are trading. Depends on the time frame that you would like to sit on the trade. And there are a number of ways you can trade currencies, namely currency futures, currency options, foreign currency exchange product. We unfortunately do not have enough time to go into details on these different instruments that you can trade currencies with, but we are always available to take those kind of questions in a separate platform. Maybe if you call us or email us during the day, we've got forex traders that can deal with those. The fourth one is global currency ETFs. So ETFs, which are exchange traded funds, are really a basket of different instruments that are put together that gives an investor an opportunity to just buy one product that sits many products inside. It then helps you not go through the process of selecting which instrument to buy, because it's just a lot. There's about 18,000 ETF instruments out there, but ETFs just makes it easy, because you can go into an ETF like a money market ETF, global money market ETF, global bond ETF, and global indices. So these ETFs allow you to invest or even park your money in a foreign currency. So in the time where the rand is actually going under pressure, losing its value, going to 13, 14, 15 rands per dollar, the size of your money also increases with this. And also the other important thing about ETFs is that these funds are well diversified, most importantly to protect your money from the weakening currency. So the tools to really implement these ways to protect your money and also profit from the imploding currency. If you go offshore directly, you can use we've got partnering banks and global stockbrokers that we work with to allow our clients invest in every way that they like. So if you go offshore directly, you can use Saxo, you can use INFX, you can use IDX Investec. So as you can see here, I've put these brands so that you might be familiar with some of them, like Investec, which is a South African and also an international bank institution now. If you want to go the rand hedges route, which is buying local stocks, South African stocks that have operations in different countries in the world, earning money in different currencies, then you can do it via IRS. It's a trading platform that we use here at Vunani at the trading desk to buy the JSE listed stocks, and we have all the stocks that are available in the JSE, including the rand hedge counters. If you want to trade directly Forex, our partnering institution there is INFX, which is really a global leader in trading online. We've got platform and systems in place for a client to just deposit money into the Iron FX, where it will sit in the currency of your choice, and then you can trade whatever you want. And then global ETFs, we can do it via IDX, which is international derivatives through Investec. Again, it's quite simple. We've got structures in place for clients to just fund the money through Investec, and then we will process their transactions ourselves. You will not be interacting with any of these platforms like Investec or IronFX or Saxo Capital Markets or RS. You deal with us, and then we do all the work for you, including reporting. So these are the tools you guys can use if you want to buy companies like Google, Samsung, BMW, Shell, BP. You open a Saxo account through us. We'll assist you in the process, and then you can start nibbling on those stocks. Yeah, so those are the tools available for you. Please do make use of them and protect your money. Now we look at the more fundamental economic picture around the world. This is you know, the 2015 economic focus. What economists have focused at for this year. What would be sort of big picture themes for 2015. If we look at the picture here, we've got a global map. If I start at the US, again, you know, you see the US economy strengthening, which is really helping the dollar to strengthen up. With as the economy strengthens, we expect the interest rates to go up. So that is another theme that will be driving the market throughout this year. You'll hear a lot of analysts, economists, and stockbrokers talking about American interest rates going up, the dollar strength. That's a theme that's driving markets in 2015. And also I forgot to mention U.S. shale frackers, which is the guys that are pumping out oil out of shale gas. That has done a lot in pushing the oil price, the global oil price down. It's also, you know, a big theme in the global economy right now, as we see that the oil price has come down, and therefore the inflation has also come down. That has helped a country like the US a lot, because they're a consuming economy. Therefore, as the inflation comes down, that increases their discretionary income, and therefore they spend more in that economy. That's why we're seeing a lot of strength in that part of the world. If you look at South America, South American countries are really considered as emerging economies, just like South Africa and other African countries. Again, they are very commodity exports driven. They export, you know, things like coffee beans, soya. They export resources as well, and countries like Venezuela also export a lot of oil. So we're seeing a lot soft commodity prices. The currencies are under pressure. There are some political uncertainties in some states because of the economies not performing as well as expected. In Africa, I won't be able to go to all of the states, but I think I'll just touch on the two biggest economies in Africa. Firstly, Nigeria, which is now the biggest economy in Africa. It's been under a lot of pressure from an economic point of view because of the falling oil price. This economy is highly oil export driven, and therefore the falling oil price is putting pressure on that economic growth, on the tax revenue of Nigerian government. Therefore, we see the naira losing significant value. That value is also affecting countries, South African companies that have operations in Nigeria. Hence, we've seen a big price drop in companies like MTN, companies like Nampak, and others which have got operations in Nigeria. South Africa, I think we've mentioned, just touch quickly, we've been in a sluggish economy for a while now, based on the factors I've mentioned before, weak demand for our resources, labor unrest, and just high unemployment, and also just lack of implementation of policies that could stimulate our economy. So those factors have filtered down to a point where the rand is weakened on the back of them. If you look at China, China is expected to slow down a bit this year. The economists have predicted 6.5 GDP growth in 2015. India seems to be the new China. India has found a new optimism. There has been a lot of foreign direct investments coming from the United States of America into the Indian economy. Therefore, that's good news for the global economy, because India has a huge population, and if there's big economic growth coming from India, we could see India growing at around 7, 8, 9, 10% per year, which will also boost demand for infrastructure, and that will help resource-based countries like South Africa to export more resources into an economy like India, which will be growing. So that is on the positive side. In Europe, we expect sluggish growth across European economies like Russia, Ukraine, Greece, Portugal, Spain, even Germany has been in the doldrums, and France. So we expect sluggish economy in that part of the world. However, the ECB did put a monetary policy in place. They will be stimulating that economy. They'll be buying government bonds to the value of 1.6 trillion euros in a time frame of 2 years. So that should pump a lot of money into that economy. That's a big money supply that will then encourage borrowing from banks to consumers, to businesses as well, so that they can borrow money and spend and increase the economic activity, therefore improve the employment situation and just improve the GDP growth. Also, a big picture risk in Europe is the Greek debt. The fact that Greece is owing the European Central Bank 500 million euros and is currently running out of cash is a big risk in that economy and to the rest of the world, because Europe plays big part in the global economy. For example, South Africa's second business trading partners is actually Europe, European countries like Germany. So we need that economy to be stable, to be organized for us to stay healthy as well. So if Greece defaults on their debt, then we could see a situation where other countries that owe European Central Bank money would also feel like, okay, if these guys are doing this, then we'll also do it. And then it becomes a mess in the global economy, which is not desired. So that is what we looking at from high level, big picture, risk and positives in the economy. Yeah, as I mentioned, the themes for 2015, we expecting subdued global growth, because you have the US that's pumping, that's doing well. However, the rest of the world is not doing that great. Therefore, that leads to decoupling of markets, where you're seeing one market doing terrifically well and the others struggling. That has led to a stronger US dollar. However, we still have low interest rates across the world. Interest rates in South Africa, in Europe, have even in Australia, even in China right now, have been coming off. Emerging economies are adjusting to a lower growth path, because emerging economies were the ones that were pushing growth after the 2008 recession. They've been doing quite well. We've seen Chinese economy growing at 7-8% per year, We've seen Russian economy doing quite well. We've seen some African states combined having an average of about 5.5 to 6% GDP growth. However, that has come off a bit, and we have to adjust to that lower growth path because of really lower demand for commodities. And then also because there's no demand for commodities, disinflation is persistent. The prices are actually not going up, they are coming down. So the US economy is coming up with to an inflection point where now they have to make that decision to raise interest rates, and and create that risk in the market, that when interest rates do finally go up, there could be a threat to company profits. Okay, yeah, as I mentioned, I won't go into detail now. Global risk, really Greek debt, the contagion effect of Greek debt, interest rate rise in the US will be a threat to earnings, slow emerging market growth like China, Russia, and African states. Locally, big risk here continue to be labor unrest, credit downgrades, and electricity issues. However, we still have sectors that we like in the economy. In the midst of all the turmoil across the world, there are still sectors that we expect them to perform, to do well, to continue to make money and continue to generate value for investors and shareholders. For example, we like healthcare, we like drug companies and hospitals, we like consumer staples like food and beverages companies. We like technology companies, telecoms and e-commerce. We also like financials like banks because we believe banks will not go anywhere regardless of what's happening in the economy. They are they are the mainstay and they are the center. Whatever you need to do, you most probably have to go through a bank facility nowadays. So bonus, the first stocks you need to profit from the rand downward spiral. This is a bonus that we thought you guys should have. Okay. Okay. Now let's look at Steinhoff. Steinhoff is an integrated retailer that manufactures, that sources retail furniture, household goods in Europe, Africa and Australia. They have operations positioned towards the mass market and value conscious consumer segments, the furniture and household good markets. So if you just look at the fundamental metrics of Steinhoff, it's got a market cap of about 78, 79 billion, almost 80 billion, PE ratio of 15, with a forward PE of 17, expected earnings per share is 7.21, dividend yield sitting at 1.28, which is still low. Wait. Okay, sorry, I have to just go through this quickly. The market cap of Steinhoff is 261 million. PE is sitting almost at 17. Forward PE 17 and a half. Expected earnings per share is for around 33 cents. Dividend at almost 2%. This company is still in a growth phase. We like a couple of things about this company. It's paying a low dividend because it's still a growing company that is integrating globally. The Pepco deal has been approved, which will boost the earnings. The Frankfurt listing that we're expecting around June will give them an exposure to global ETFs, which will push the liquidity of the stock and will make it more attractive to global fund managers Therefore, you would easily see Steinhoff's share price going to 100 and above. So we really like the stock. We think it's one of the stocks that you can add into your portfolio because it's got operations outside South Africa. It's not really exposed into the weakness of the rand. It's actually hedged in the sense it's one of the rand hedge counters that we mentioned in the previous slide. So we like this stock. We think you should be adding it to your portfolio as well. Again, the second one, we investors always mention the fact that you need to diversify. You need to be exposed in different sectors of the market because not all sectors of the market will perform well all at the same time. So that diversification is very important. For example, investing in property, which is a different asset class, is important for any kind of portfolio. We like New Euro Property Investment, which is a commercial property investor. It is listed in the main board of the JSE, and it's listed in the Bucharest Stock Exchange in Romania, and an alternative investment market in the London Stock Exchange. Its fundamental matrix, it's got a market cap of 2.9 billion, price to earnings ratio of 23.86. People say it's expensive, but we think it's expensive for a reason, and this is a good reason. It's got a forward PE of 16.5, which is quite good. It's got estimated earnings per share of 63 cents. It's paying a nice dividend of 3 cents, the old Martin Slebet. We also like this company because of the fact that it invests in emerging country properties. If you're looking for exposure into Europe, into emerging European countries, Southern Europe, you should be looking to buy this stock. You will be because it's invested in countries where you can earn a pound, a euro, and also a yen. So we think this is a good story if you want exposure into emerging economy property sector. This is the stock you should go for. And as you can see in the share price has run incredibly well, reaching the high there of close to 150. It has come off a bit. I think this bit pullback is given investors and traders to go into the stock and trade it for more upside that we expect. Discovery, one of the South African great stories. It's really a pioneer company that came to the fore in 1998. It offers health insurance in South Africa, in the United States, and in the United Kingdom, and it also offers life insurance in South Africa and UK. If you look at fundamental metrics here, 79 billion market cap, trading at a PE of 15, which is okay in my view. It's not on the expensive territory, but not cheap either. It's sort of median. It's got a forward PE of 17. Its earnings per share, expected earnings per share is 7.21. It's still paying a lower dividend because it's still a growth company. It channels a lot of retained income into growth projects. They've just recently completed, in fact they are completing a rights issue, which is basically seeking money to existing shareholders to fund the growth operations that they're initiating in Europe and in China, which is a big economy, second biggest economy in the world. We expect them to deliver the business model that they've been able to deliver in South Africa in the form of vitality that sort of everyone follows now in countries like China, where there's a huge population. We expect that to bring a lot lot of revenue, a lot of growth for this company. As you can see, the share price did top there at around 132. It's come off a bit on the back of this rights issue. I think this is an opportunity for an investor to pile up on this stock. We expect a lot of earnings growth to come from Discovery. SAB Miller, I think most people would know SAB Miller, multinational brewing and beverage company. It's got headquarters in London, in England. It's the world's second largest brewery measured by revenue, and it's also a major bottler of Coca-Cola, which is probably the biggest brand in the world. Again, this is a stable company that has been around for over 100 years now. It's got operations across the world. They earn money in different currencies, so it makes a very good rand hedge. We don't expect people to drop their habits of going for a drink. We still expect this company to do well in the future. They've got very strong logistics distribution. They've got very big cost saving ability. The economies of scale are incredible, and you could possibly see a deal with another biggest brewery in the world to SAB that could really push this share price to like 800 rands per share. So whilst the rumors around the deal have quieted down a bit, and the share price did come off from the highs of 680, we think this is an opportunity for investors and even short-term traders to take a look at this and nimble. We also like Mediclinic International, which was founded in 1983. It's an international private hospital group with operations in South Africa, Namibia, Switzerland, and United Arab Emirates. As listed in the JSE. Fundamental metrics around the stock, it has a market cap of 105 million rands. With a P of 28. It's one of those stocks that are considered expensive, but it's also expensive for a reason. The market is appreciating the value that this company is able to generate. That's why it's been doing so well. If you look at forward P of 27 there, which is quite good. Estimated earnings per share is 444. Pays a lower dividend because it's a company that is early in its growth phase. It's also going through an international integration. You're still gonna see maybe a lot of deals coming through from this company, in other areas of the world where the demographics are favorable. What we really like about Mediclinic is the fact that they operate in Switzerland, which is an economy that has got the highest GDP per capita, meaning that a lot of people do have money. They do afford expensive private hospital companies. And also countries like the United Arab Emirates also have a very good GDP per capita. People there are generally well off, and also there's a huge demand for them in South Africa as well. You can see that share price has done really well. I think this is the company in the right sector. It's fairly defensive. Even no matter what the economy is doing, people will still need private hospitalization. The recent immortality figures that come from the Institute of Actuaries do show that around the world people are living longer, and as you get older you need more healthcare in your life. These kind of companies will benefit from that. So we like that story. We like that fundamental security that this company is operating under. So it's one of our stock picks in our portfolios. And thank you for joining our webinar. To contact me for any questions or anything that you might want to mention, here is my contact number, 011-384-2948. Also, my email address is here, singer@vunaniprivateclients.co.za, And now it's time for questions. Okay, so if you have any questions, you can ask now. Yeah, I mean, there are, ETFs that we like. For example, DBX Tracker Euro, which is combines Bobby actually asked any specific ETFs we should look at. The ETFs that we currently like is DBX US, which is a exchange traded fund exposed to S&P 500, which is you just buy the American market. As we have seen, it's performed really well. Having exposure to that will not only grow your capital from the share price appreciation, but also the weakening currency. When you bring that money back to South Africa, will be more. We also like DBX EU. We think with the stimulus coming into play, we think European equities will start performing as well as the US equities have performed. So you just buy Euro stock 600, just put together in one basket to form a DBX EU. Yeah, Philip asked, in terms of forex, is there a specific pair we should watch, like USD ZAR? Most definitely, USD ZAR is most probably for me the one to watch, because a lot of what we sell is sold in the dollar international price. So it's always important to see where our currency is trading to the dollar. And then also the Great Britain is also currency that I would watch closely, especially if I'm trading dual listed shares that are listed in South Africa and listed in the London Stock Exchange. I'll give you an example of those shares. That's BHP Billiton, that's Anglo American, that is SAB Miller, that is Investec, and so forth. So I would watch Great Britain as well. Okay, so this is our last question. What is our favorite rand hedge, from Christina? Right now we really like Mondi PLC, which is a packaging company. We think it's listed in South Africa and also in London. We think that because the European economy is gonna get a huge stimulus package, as we start seeing growth, packaging companies should be part of that growth, because anything that you buy will come in a packaged form. Therefore, we expect increasing revenues. We expect the company to outperform from a revenue point of view, and we expect the share price to reflect that. So if you buy Mondi PLC or Mondi Ltd in South Africa, you've hedged yourself against the rand, and it really does track how the rand is performing relative to Great British Pound. Okay, that's it, everybody. Thanks for joining the webinar. Again, if you've got any other questions, you can go to our website. You you will find our details there, or you can contact me on my number 011-384-2948, or you send me an email. It's singer@vunaniprivateclients.co.za. Thanks.